In today's video, we're going to look at 4 things that can kill your wealth. And 2 of these are through investing. So let's get started. Hi guys, welcome back. If you're new here, welcome. Thank you so much for joining.
Ow.
In today's video, we're going to talk about 4 things that can kill your wealth. 2 of them have to do with investing, and the other 2 don't. So hopefully by the end of this video, you will be aware of all 6 and hopefully avoid them in the future. The first one that has to do with investing is investing for dividends only. So investing only for dividends? What's wrong with it? Well, let me explain. When you invest for dividends only, what you're really doing is you're sacrificing your capital gains for income. You're saying that I want to get paid a dividend every quarter, every 3 months, or I want to get paid a monthly dividend, depending on what stocks you choose to invest in. And there's nothing wrong with that. But what you're really doing is you're limiting your upside potential. Because most of the companies that pay high dividends are mature companies, meaning they've been around for a long time, their growth days are behind them, and they just want to keep giving you a nice steady dividend. Sometimes those dividends can be very high, anywhere between 6 to even 12%. Now, if you're okay with that, if you're okay with getting 6 to 12% every year, and you understand that that percentage may fluctuate based on how the company performs, then it's fine. But if you want higher capital gains, you'll be really limiting yourself, because most of the companies that do unpaid dividends, or that pay low dividends, are growth companies. They reinvest their profits back into the business to grow. That's why they do and pay out a lot of dividends, because they want to take that money and invest it back into the business to grow faster, to hire more people, to open up more locations, to open up new product lines. So when you invest in a company like that, you're getting in on the ground floor. If that company succeeds, then your stock price goes up significantly because you own a piece of that company. But if you invest in a company that pays a high dividend, you're probably going to see a lower upside because those companies tend to be more mature. Now, obviously there's exceptions to every rule, but that's generally how it works. So if you want to invest for dividends, that's fine. Just understand that your upside potential is going to be a lot lower. The next thing that can kill your wealth is following what's hot right now. So what I mean by that is, if you're chasing returns, you're chasing the hot stock right now. Tesla, for example, a few years ago. Everyone was trying to get into Tesla because everyone was talking about it. I mean, if you had gotten in a few years ago, then you would have done really well for yourself. But if you got in at the peak, then you would have lost a lot of money. Same thing with meme stocks like GameStop, AMC. If you got in early enough, then you did really well for yourself. But if you got in when everyone was talking about it, you probably lost money. So chasing what's hot right now, chasing returns can often lead to poor investment decisions. And this gets back to the point I made earlier about investing in a company that pays a high dividend. You also want to look at what's popular right now. Everyone wants to chase the latest thing, which leads to poor investment decisions. So if you want to avoid this, you have to ignore what's popular. You have to ignore what everyone is talking about and make your investment decision based on facts, based on research, based on your financial plan. Don't follow what's hot. The third thing that can kill your wealth is investing when you're not ready. What do I mean by that? Let me give you an example. Let's say you just graduated from university. You have a good job, you're making good money, and you decide to invest some of that money. Where do you go? Well, you go to Vanguard, Charles Schwab, E-Trade, wherever you want to open up a brokerage account. But have you invested in yourself yet? Have you invested in your knowledge, in your skills, in your career? Or are you jumping into investing because everyone else is doing it? Because you see people on YouTube making a ton of money, which brings us back to the last point, chasing what's popular. You have to ask yourself, am I doing this because it's popular, or am I doing this because I actually understand it? And if you don't understand it, you need to educate yourself. Invest in yourself first before you start investing your money, because otherwise you're just throwing your money away. You're not really building wealth. Wealth is not just about making money. It's about keeping that money growing. If you don't know what you're doing, you're probably going to lose that money. So invest in yourself first. Invest in your skills, invest in your career, and only after that should you invest your money. And finally, the fourth thing that can kill your wealth is investing more money than you can afford to lose. This is the advice that all financial advisors give you, but many investors don't follow it. When you invest, you need to have a diversified portfolio based on your risk tolerance, based on your financial plan. And you need to invest in assets that you can stomach. So for example, If you have a low risk tolerance, then maybe you shouldn't be investing in individual stocks at all. Maybe you should just be investing in mutual funds, in ETFs, because that's less risky. But if you have a higher risk tolerance and you want to invest in individual stocks, you want to invest in smaller companies because you think they have more upside potential, then that's fine. But you need to invest in those companies based on your risk tolerance, based on your financial plan. Many investors don't do that. They invest based on emotions. They invest based on FOMO. They hear other investors talking about a particular stock, and they throw a bunch of money at it, and then the stock tanks. Then what do? They panic sell. So one killer of wealth is not investing in dividends, chasing returns, investing when you're not ready, or investing more than you can afford to lose. All of those can kill your wealth. But you also have things that can build your wealth, like investing in your skills, investing in your career, investing in your knowledge. All of those things can help you build your wealth. So it's not just about what you're investing in, it's also about what you're not investing in. So if you want to learn more about building wealth, please click here to watch this video. Thank you for watching. If you enjoyed this video, please give it a thumbs up. It really helps me out a lot. Subscribe to my channel, share this video with your friends and loved ones, and leave me a comment below on what you think about this video. Do you agree with me? Do you disagree with me? Why? Why not? I would love to hear from you. Thank you for watching, and until next time, take care.